Hello and very good evening. This is WION Wallet. I'm Sumit Chaturvedi and let's go straight to our top headlines. The government today said it has not accepted most of the demands of iPhone maker Apple, which wants to set up manufacturing facility in India. Finance Minister Jaitley says he is hopeful of rolling out of the biggest tax reform, GST, from July 1st, which will make goods and services cheaper. The United Kingdom has followed United States in banning electronic devices on passenger flights from several Muslim-majority countries. And SENSEX dropped for a third straight session today as banking and auto shares fell on the index. BSE SENSEX was down 1.8%, while NIFTY was down 1%. Well, straight to our big story, the government today has said it has not accepted most of the demands of iPhone maker Apple, which wants to set up manufacturing facility in India. Apple unit has sought concessions including duty exemption on manufacturing and repair units, components, capital equipment and consumers durables for smartphone manufacturing and service repairs for a period of 15 years. Apple also wants relaxation in the mandated 30% local sourcing of components. Apple also wants reduction in custom duties on completely knocked down and semi-knocked down units of devices that are to be assembled in the country in January. In January, Apple had indicated to the government that it is ready with a blueprint to begin manufacturing iPhones in India, but wants fiscal concessions including custom duty waiver on import of components. That's clearly a bad news for Apple and bad news for government's Make in India program as well. Now, moving on, Finance Minister Arun Jaitley has said he is hopeful of rolling out the biggest tax reform, GST, from July 1st, which will make goods and services cheaper and tax evasion difficult. The Finance Minister also said achieving a growth rate of 7 to 8% is plausible, and if economies pick up globally, the country's growth rate can go up further. Demonetization, Jaitley said, will act as a disincentive towards continuing to deal with shadow economy, and integration of informal with formal economy will increase the size of GDP and make it cleaner. Union Cabinet this week had cleared 4 supplementary GST legislations which will be introduced in Parliament in the ongoing budget session. As regards growth, Jaitley said India would continue to remain amongst the fastest growing economies of the world. Let's hear him out.
Really has to submit to the taxation authority of that region, each having a different level of taxation. There are different kinds of taxations, and therefore he has to face multiple assessing authorities. Each time he pays tax, he also pays tax on the tax component that he has already paid, making his goods and services slightly costlier. So India, despite being one political entity, is not a single economic entity. It's divided into multiple economic entities. Each charges multiple layers of taxation, with no input credits being available in many cases.
Now, government has moved amendments to finance bill which will reduce cash transaction limit to Rs 2 lakh from the earlier Rs 3 lakh as announced by Arun Jaitley in Budget 2017. This new cash transaction limit as part of amendments to finance bill is yet another step to curb black money after a stringent Black Money Act and the demonetization exercise. Transactions of Rs 2 lakh and above will be illegal once the finance bill gets the President's consent. During the Union Budget announcement, Arun Jaitley, Finance Minister, had proposed that legal limit for cash transactions would be Rs 3 lakh in line with the recommendations of Supreme Court constituted Special Investigation Team or SIT on black money, but now government seeks to reduce it to Rs 2 lakh, that is down by 1 lakh, and the finance bill is expected to receive Lok Sabha's nod on it very soon. So now some good news for India, as even as world economy struggles and many developed countries are trying to alter their consumption through austerity drive, India could end up as the third largest consumer economy by 2025, according to a report by Boston Consulting Group or BCG. Consumption in India is set to triple to $4 trillion by 2025 as rising affluence drives changing in consumer behaviors and spending patterns that have big implications for companies. The BCG report, Center for Customer Insight, has said all that. Well, it also said that the many facets of changing consumer would be visible in India, and a nominal year-over-year expenditure growth of 12% in India which will be visible, and it is more than double the anticipated global rate of 5% and will make India the third largest consumer market by 2025. According to the report, in addition, the internet is increasingly pervasive factor in India's commerce and its influence will only expand. Online spending is taking off. In the past 3 years, the number of online buyers has increased sevenfold to 80 million from 90 million. Digital's influence on broader consumer spending is significant also, and it is growing rapidly. Digitally influenced spending is currently about $45 billion to $50 billion a year, and that figure is projected to increase more than tenfold to $500 billion to $550 billion and to account for 30% to 35% of all retail sales by 2025. As a result, omni-channel interaction is more and more important, but its significance varies by category. Now, news from auto space, where Honda cars in India will get costlier by up to Rs 10,000 from next month on higher freight charges and input costs. The prices of newly launched WRV will, however, remain unchanged. Honda sells hatchback Brio, premium hatch Jazz, sedans Amaze and City, MPVs Mobilio and BRV, and premium SUVs CRV in the Indian market in the range of Rs 4.7 lakh to Rs 37 lakh. Last week, BMW also announced a price hike of 2% across its India lineup in India starting April 1st. Now moving to Europe, where senior Goldman Sachs Group and Morgan Stanley executives said they are preparing to shift staff and operations from London to elsewhere in the European Union as Prime Minister Theresa May sets up UK's exit from the bloc. A day after May's office announced she will open 2 years of divorce talks with the EU on March 29, which is next week, Goldman Sachs officials said his bank will initially relocate hundreds of London-based employees to expand other offices after the split. Brexit may disrupt the financial industry more than others if the UK's separation from the EU costs banks their ability to easily serve consumers and companies across the region. US banks currently work throughout the bloc from bases in London, but the so-called passporting rights enabling that are likely to be extended once the UK has pulled out. Goldman Sachs is considering making Frankfurt its hub inside the EU and could move as many as 1,000 employees, including traders and senior managers. News from the e-commerce space, where India's top e-commerce firms Flipkart and Amazon India are adopting divergent strategies to increase their sales. Rather than spending cash and effort on increasing the absolute number of online shoppers, Flipkart is instead trying to sell more products in untapped categories to its existing users. Amazon, on the other hand, will try lead the expansion of e-commerce market as it adds all kinds of products and maintains its high level of advertising spending, which is aimed partly at attracting new users. According to experts, the maximum percentage of products that customers buy online are books, smartphones and electronics. The online reach of most other categories such as fashion and furniture is still very low. The biggest lever of growth over the next couple of years will be increasing the online penetration in the other categories, and therefore it is suggested that both these giants focus more on these categories to increase their sale in coming years. Now, some good news for Indian Railway passengers, where starting next month, passengers will be able to travel in Rajdhani or Shatabdi trains, even if they have booked tickets in ordinary express or mail trains. Indian Railways is launching a new scheme from April 1st, under which waitlisted passengers can get confirmed accommodation in the next alternative train. There would be no extra charges or any refund provided for the difference in fare as per the scheme. The scheme is named Vikalp. The scheme aims to utilize vacant berths in premium trains such as Rajdhani, Shatabdi and Duronto. Well, now to our today's special, which is a new ban in the skies and how will it impact Indian airlines and Indian market. The UK has followed US in banning electronic devices on passenger flights from several Muslim majority countries. The Department of Homeland Security announced a ban on large electronic devices from cabin luggage and baggage from flights from 9 airlines in 8 countries across 10 airports in the Middle East. The measure came after department claimed the terrorists are seeking innovative methods to bring down passenger planes amid fears that bombs could be hidden in laptops, tablets, cameras, DVD players and electronic games. The list of countries include Jordan, Qatar, Kuwait, Morocco, UAE, Saudi Arabia, Turkey and Egypt. The list of airlines affected by the ban includes Royal Jordanian, Egyptair, Turkish Airlines, Saudi Arabian Airlines, Kuwait Airways, Royal Air Maroc and Qatar Airways. Emirates and Etihad Airways will also be impacted by this ban. And after UK and US, Canada is also considering prohibiting personal electronics on board flights from Turkey, the Middle East and North Africa. Well, this has come after both UK and US announced these bans. The 3 countries routinely share intelligence, including on terrorism threats, as part of Five Eyes intelligence gathering alliance. Canada's Transport Minister said, and I quote, "We are looking at information that has been presented to us. We will look at it carefully and have a fulsome discussion amongst our colleagues. The information has provided to us on the threat by other intelligence communities as well." I end quote. If Canada were to follow a similar ban, among the routes affected could be Turkish Airlines flights from Istanbul to Montreal, Royal Jordanian Airline flights between Amman and Montreal, and Qatar Airways flights between Doha and Montreal. With this, it is time for a short break on WION Wallet. After the break, we will continue with our coverage of markets. Stay tuned to WION. Welcome back to WION Wallet and straight to our coverage of markets. Well, in India, SENSEX dropped for a third trade session today as banking and auto shares fell on the index. 30-share BSE SENSEX was down 1.08%, while NIFTY was down 1%. Regional markets were trading lower, tracking overnight losses on Wall Street on doubts over US President Donald Trump's economic policies. Asian stocks fell as doubts on Donald Trump's economic growth agenda prompted investors to dump risky assets in search of safe havens such as government bonds. Wall Street fell sharply on Tuesday, with the S&P 500 and Dow Jones Industrial Average losing over 1% and their worst one-day performance since before Trump's election victory in November. To talk more on this issue, we are joined by Prashant Bansal of Testimony Securities, our market guest for today. Good evening, Mr. Bansal. First of all, can you define us why did the market behave in this typical pattern and what is the outlook for rest of the week?
Good evening, Sumit. Markets closed at about 9030 levels today, and what we have been seeing over the last 4 trading sessions is that the markets have been continuously coming down. This is one of the largest 4-day falls over the last 6 months that we are seeing in the markets. But why the markets have fallen, I think we got to look not domestically, but we got to look what's happening internationally. Donald Trump has not been able to repeal the Obamacare. His own party MPs, Republicans, are not standing solidly behind him. So we are seeing continuously that Dow Jones have fallen. Yesterday it had fallen by about 200 points. So unless and until the global markets also start rising, so in the very, very near short run, we would see that Nifty for the current series, the upside is capped. When I look at domestically on the derivatives data, we have the maximum open interest of about 9,200 call options of about 7.3 mu at 9,200 strike. So which means on the upside we are capped at 9,200 levels, and on the downside when we see that there is a maximum open interest at 8,800 and 8,900 put. So which means probably the downside is also capped at about 8,800 levels. So for the till the next expiry, we expect markets to range and consolidate around these levels, but we would be driven more by the global cues.
And what about buying at these levels? Do you think this kind of fall in the markets give an opportunity to investors to come and jump in and take advantage of the market? Should investors come and stay at these points when markets fall on some day?
I think this is a very good question, because this rally which has gone from 8,000 levels to 9,000, this was more a rally of disbelief, and many of our investors were not able to participate in this rally. So this fall gives us a very good opportunity to enter the markets, because our midterm view on the markets still remain extremely bullish. When I look at the FII's data for the current month, FIIs have bought in about 17,000 crore in the month of February, in the month of March. Even in Feb, they had bought about 8,700 crores of stocks. So FII data is looking good. We have a political stability with the huge mandate that the government received in Uttar Pradesh. I think we are set for the next another 1,000 points rally on Nifty over the next 6 to 9 months. In fact, last time when I was on WION channel, sometimes last month, we had put our own internal targets for Nifty at 10,500 levels.
Well, that's a big statement coming to you from Mr. Bansal that there could be 1,000 points rally seen in SENSEX. But staying with the Indian markets, this is a season of IPOs. Yesterday we saw bumper opening of D-Mart IPO, and also there are one or more two IPOs in line. What do you think about these IPOs? Is it right time to invest in market through these IPOs?
I think for a retail investor, the best bet to invest is through systematic investment plans of mutual funds. But those who still want to bet in IPOs, we have got some extremely good IPOs which are lined up over the next 3 to 6 months. Yesterday's IPO of D-Mart was a fantastic IPO. Many of our clients made money, and the company is led by R.K. Damani. Our guess is going to be the next Dhirubhai who would be delivering returns to the shareholders. But we also have some of the good IPOs lined up like CDSL, like National Stock Exchange. So we would come out with our recommendations to our clients as to whether they should subscribe to these IPOs or not. But for a retail investor, the best mode of investment is invest through mutual funds through a systematic investment plan.
And Mr. Bansal, talking about the global markets, since Indian markets are so closely linked to global markets, when do you see global markets coming back to the same or previous good levels? Because there is no clarity which is going to come anytime soon on Trump's policies. So what is expected out of global markets?
I think we'll have to wait and watch. The fall in Dow that we saw was primarily because investors had started doubting the pro-growth agenda that Trump had put out before the elections. If we are to see, he has not been able to repeal the Obamacare. So unless and until he is able to get all the laws and all the pro-growth measures that he wants to take, like infra spending, cut in corporate tax, repealment of Obamacare, our short-term view is that unless this is done, we will not be able to see extremely major highs on the Dow. So we'll wait and watch currently.
And about rupee dollar, rupee is on a correct path of correction. Well, definitely, if rupee becomes more and more stronger, this will be not a good thing for our exporters. It won't be a good news for export-driven countries, the companies also. Would you say that?
Let's look at why rupee has been strengthening. When we look at the dollar index was at about 103.82 levels about 2 months back. Because of the recent developments in US, the dollar index virtually crashed. It's at about 99.34 levels. When I look at the US 10-year treasury yields, they had fallen to levels of about 2.4, and about 3 weeks back they had hit 2.6. So what we are seeing is that dollar is weakening. So when dollar is weakening, in Indian rupee is strengthening, we are also seeing strength in euro. So unless and until dollar starts regaining the strength, we'll continue to be in terms of bullish on the Indian rupee, which is going to be fairly negative for IT and pharma. This is being reflected in a lot of stock price movements on both IT and pharma.
Well, thank you so much for talking to us, Mr. Bansal. Today here was our market guest, Mr. Prashant Bansal, who is hopeful that markets will add 1,000 points to the tally very soon. Well, he is hopeful there, and let's see how the markets are going to do in the next part of the week and month.